Hello everyone, welcome to today's live stream for the market review for first week of October. Price action has been good. We have seen a lot of movement in price over the last 1 week and everything has been looking green. As you can see in my background, all the crypto stocks have, crypto coins have been doing pretty well. They have been doing pretty decent job overall in regards of where the market wants to head towards. And even the stock market, we have seen more green than red. We have seen a lot of stocks outperform the market. Nasdaq is sitting close to all-time highs. We have closed the previous week as a bullish candle on both Nasdaq, S&P. Gold has been doing tremendously well. Now it's about time to kind of revisit where we are in the market, how we have performed in the market, and what's going to happen next in the market. So stick with me. This is Squid Traders, and that's what we'll be talking about today. Let's go. All right. So the government shutdown is in. And the news is it can last up to 3 weeks. Now, what does this really mean? What it really means is that if the government shutdowns for 3 weeks, we'll not have any data. In the meantime, FOMC minutes are going to come out. We are going to be close to FOMC meeting and another rate cut. Now, the decision-making process kind of becomes a bit confusing over here. What will really happen is dictated mostly by how the government or how the Fed have forecasted their numbers. Now, if their forecast says that labor numbers are going to go higher, well, they have to think about the rate cut. They have to increase the rate cut by what they were planning before. So a lot depends on how they were thinking in the previous FOMC. So the FOMC minutes that are going to come out this week are going to be really crucial. So we had a lot of news that was supposed to come out, and unemployment claims were supposed to come out, hourly earnings were supposed to come out, unemployment rate was supposed to come out, non-farm employment change was supposed to come out, and all of them now are tentative. So they might not. Most likely they will not. So if the government does not have, the shutdown cannot be taken off, there's no chance these rate cuts, these numbers are going to be told. But FOMC meeting minutes, they will come out. Prelim, UOM, consumer sentiment will come out because this is a private entity. University of Michigan basically releases these numbers, so they will come out. They are not going to be stopped because the government has been shut down. So we have just two news basically this whole week. Wednesday, minutes comes out. Friday, the prelim UOM come out at 10 a.m. I don't see the prelim numbers having a major impact on the market, but since there is not anything else, I would really keep an eye next Friday on what happens here and how the market reacts to these numbers. Moving on, this is where now we'll do the analysis. We'll try to talk about where the markets are and how the market, and even go through the charts and everything to see what's really going on in the market. Now, Nasdaq in the last 6 straight months has been bullish. And the last time this happened was in 1986. It has never been, like the previous 5 times, the Nasdaq 100 has not done this. It has never ended lower than 12 months low. So we have, with an average return of around 18%, like this is what matters. Average return of 18% if you have 6 back-to-back green months. It doesn't end below the previous 12-month mark. So that gives us a good insight, and that we are still going higher. But till where? What's the point that we are looking at? What's the areas that should be important to us? I would say there's still a bit of movement left in the market. 9% or not, we'll see in the charts. But yes, there's still a little bit of movement that is left in the market where the market could head towards. So let's look at the charts and let's try to understand what could really happen over here. So this is my part, right? Tweet reading is not. This is where I am good. This is where I bring value to the streams, to the world, right? So let's look at where the markets are. Nasdaq 100. So Nasdaq on the weekly chart, okay, look, everything is looking beautiful. We had these back-to-back fair value gaps. The extension of the fair value gaps is basically 250 to 200% over this. Target has been achieved. We still have an extended target to 25,600 or 25,750, 400 to 450% could be achieved. But where is it right now? So we have closed the previous candle under the previous week high. Now that gives us a very weird position to be in, and we'll see why. When we look at the S&P chart, I'll talk about why this small closure below the previous week high is very, very crucial for Nasdaq, and why it could have an impact on where we want to head from here. Now, Since we have closed it lower, and S&P 500 at the same time has basically closed just a tad bit higher, if you will see, on the previous week high. This is called a SMT, where the closure of previous week is not above for one asset, which are correlated to each other. One asset has closed above, whereas the other one has not. This is a bearish SMT divergence that has taken place in price action. It is now confirmed with the closure of the candle. What we will wait for now is Nasdaq to show some signs of bearishness before we can think that the price is heading lower. So as of now, you don't take action on this information. What you look for is how does the market opens, where does the market trade towards, what does the market do overall in the coming days, so that this bearish SMT can be confirmed. Now looking at the daily chart for Nasdaq, we are basically trading inside of this daily fair value gap. Now my game plan is pretty simple, right? It's a pretty straightforward game plan. Monday, wait to see how we react inside of this fair value gap. Can we sustain this, or do we break down below this? If we break down below this and can sustain the price action below it, that gives you a bearish bias towards this liquidity area of 24,639. I'm not saying Nasdaq is going to keep crashing. I'm saying that there might be some sort of correction if we go below this fair value gap. That is what my insight is. That is how I'm looking at the market. But what if we don't? What if we open on Monday, we start traveling higher and break the previous day high? If let's say Monday closes above the previous day high and we can sustain that move, then our bullish targets for the weekly chart that were around the upwards of $25,000, $25,600 will come into the picture. But as of now, the market is saying that, hey, yes, I've been bullish. Yes, I have done a change in state of delivery on the previous 3 bearish candles. Yes, I might want to go higher, but you will need to wait for confirmation. I'm not in a state to tell you whether 25,600 is my target or not yet. So you just wait and watch on Monday. Where does the market wants to head towards? Look at the session liquidity, look at all the liquidity that is available closer to the price action, and then make a decision. Now the same chart looking at the 4-hourly time frame gives us another view. Now this is where you can make a decision on what side the market wants to head towards. Now, as we talked about, we are inside of this fair value gap on the daily time frame, but we have left a nice fair value gap on the 4-hourly time frame. For any bearish price action to occur, we should be able to respect this fair value gap and drop down lower into this order block, right? That's what you will want to see. But what if we don't do that? So now, instead of having this previous day low and previous day high, which are quite apart, you now have a fair value gap which is right in the middle. If price goes inside of this fair value gap and gets rejected from there, it will give us a very, very good place to short the market from. And you can basically look at an hourly candle closing below these 2 candles after retesting the fair value gap. If that sort of price action happens, that's a perfect short. If we are able to invert this fair value gap, you don't have to wait for previous day high to be taken. If this is inverted, you can straight away long and take a position from here to 25,600. That would be a good place to be in the market for. So I have eyes on both sides of the market right now. I'm looking at it and I'm thinking, okay, we are still in the premium area of this range on the 4-hourly. If we start digging lower, I would love to see price just hit its head on this order block or take the previous day low first and then basically change the structure towards the upside. That would be the perfect entry for the week. So yeah, keeping our eyes on basically the fair value gap that is right on top, the liquidity that is lying below, and see how we react to either of those to kind of make a decision on which side of the market I want to be for the week. S&P 500 on the weekly chart, as we just saw, we have closed above the previous week high. There is nothing to see apart from that, apart from this small fair value gap right over here. So S&P for me is not tradable because I don't have enough footprints available on the higher time frame to play from. So S&P on the weekly, nothing to see. On the daily, again, there's a change in state of delivery, yes. But there's no fair value gap being left, no fair value gap at all in this whole sequence of price action. The only thing that you can consider on S&P 500 is that, okay, if we are treating this sequence of candles as an order block, right, which led to the sweep of the all-time high, then the price maybe would want to retest it a little, maybe wick inside of it and then bounce from it. That is the area that I'll be looking for. That is the area that is more important to me than anything else on S&P 500. So clear indications on both the indices. Wait for Monday to play out. See how Monday plays out. You might get an opportunity midday, at the market open on Monday. But if you don't, that's completely fine because Monday might set up the whole week for you going forward. So discipline, calmness, just making sure you're not making any mistakes over the course of this period is the most important thing, I think, for Nasdaq or S&P 500 right now. Moving on to global commodity index, like it is looking bullish. Like look at this chart. This chart is looking amazing. The commodity index is just banging. What the commodity index does do is it gives you a precursor of where the yields are going to head. So if the commodity index starts to go higher, there is a high chance that the yields will follow suit slowly, steadily. So they are basically a bit lagging. As you can see, overall, commodity index higher, yields follow suit later on. It goes lower, yields will follow suit later on. So now with index going higher, you can expect yields to start going higher as well slowly. This is the correlation that they have. So keeping an eye on this, commodity index is banging, it's just going through the roof, bringing us to gold. Now gold is in a state, or it's basically, so gold is in a whole trend of its own. Now we have two back-to-back fair value gaps right over here, acceleration gaps. Target of those gaps was around 200% is $4,000 and 250 is 4111. Then that gives you the initial target, but people would be aiming for $4,400, right? But I am not aiming for that. Why? Because there were two back-to-back fair value gaps right over here. This is very, very small one, this one, the first one. But if you will see closely, there is a fair value gap right over here, just right in the middle, right over here and over here. So the measured move for that is 200 to 50% has been achieved in this week, but the 400 to 450%, that is the extended move, is also in line with the previous two fair value gaps 200%. So if we bring that back, so let's go, yes. So if you will see, these two fair value gaps had a target of 200 to 50% right over here. So what I'm aiming for is a $4,000, $4,080 to $4,100 gold per ounce in the coming weeks, and I think that's an achievable target for gold. That is not like, I'm not aiming for the stars. I'm aiming for another couple of percent move, around 5% move, so that I think can be achieved. Gold is looking bullish on the weekly chart. Let's go to the daily chart to see what is happening. So on the daily chart, we have equal highs, and we are basically left a couple of fair value gaps right over here. So that's looking beautiful, but the main thing is the 4-hourly chart. A beautiful ascending triangle formation has been confirmed, and the target of that will be around 4,055, which will break us out of this consolidation. And that's how gold really works, right? Consolidation, pump out, consolidation, pump, drop down. So it's always like that. So I'll be aiming to see how we respond to the equal highs. Can we sustain above equal highs? If we can, gold is a bullish trade in the coming week for $4,100 and beyond. Now, looking at dollar index, like last week when we had this call or this video, we basically talked about where the dollar index should be heading. Dollar index is still looking bearish. We have a lot of sell side liquidity towards the downside. I'm still aiming for that sell side liquidity of $90, $93, and then going beyond that to $90. How do we achieve that is still a question. Do we first go higher to go lower, or do we just smash it down from here and just achieve it and then go higher? Let's see how we react. We have to be open towards the price action. We don't want to make a decision based off what's happening right now. So my eyes are peeled and my eyes are sticking on the DXY, because that is going to set a narrative for me for the coming quarter as a whole. Even though we all know Q4 is mostly bullish and very, very bad for DXY, you still have to wait for the price action to play out. If the price action hasn't played out, you're basically making decisions on nothing. So as of now, it's a very tight consolidation. I want to see a breakout of this consolidation. I want to see the price go towards a certain liquidity. Once it has achieved that liquidity, that's where we will make decisions on how do we want to trade Euro USD, GBP USD, and other more important Dixie related Forex currencies. So that was for a lot of the major indices and DXY and gold. Now let's go and talk about our very favorite, our very own Bitcoin. So Bitcoin has hit 125,000, a new all-time high, a 7-day candle which is looking beautiful as fuck, right? It's a 2.5 trillion asset now, the 7th most valuable asset in the world. And you would want to see, like, my reaction when I saw Bitcoin go to that area was this. The moment 125K was hit, I was like, damn you Bitcoin, that's a new all-time high, that's a new price, that's a new area for people to be like, oh, you missed out. This is the FOMO. The FOMO is kicking in. The all season is coming soon. That is how you should be looking at the markets right now and enjoying it. But let's look at the charts, because charts tell a different story than Twitter memes. The charts are pretty clear. So starting off with Bitcoin, Bitcoin has been trading very, very well. Now, if this is the local top, let's assume for a second this is the local top. We have swept a lot of liquidity from all-time highs, and the market wants to refresh a little, grab some more liquidity. Where would you find that bounce? Like, if it keeps going higher, like, let's be happy, let's make some money, guys. But if it is not what you expect it to be, and if this is like the fake top that is being created, where can you expect the bounce? The bounce can come from this order block. So I am really loving this order block, the way it has been placed. It's right in the golden pocket of the current price action. So even if you see a move down, I would say this 114 area is where your eyes should lit up towards higher prices. My overall target on Bitcoin is still sitting at around $150,000. It is not based off my intuitions. It is not based off anything else. It is only and only based off technical analysis. The breakout from the weekly inverse head and shoulder pattern right over here. So inverse head and shoulder breakout, that's the target for me. We have inverted this fair value gap completely on the weekly time frame, killed it, blown it away, ripped it to pieces. A very beautiful bounce from the neckline. So this target I feel is getting achieved. If not 150, 140 area is when you should start taking profits, start thinking about which color Lamborghini you're buying, start thinking about what your villa size is going to be. That is where you should think about all those things. So Bitcoin is still bullish. Bitcoin is looking beautiful on the daily, on the weekly, and let's look at the 4 hourly just to get a bit of an idea of where we are in the market. It's not an extended leg. I haven't seen the 4 hourly yet, but it's not really an extended leg. The only concern I have is we had the first consolidation right over here, then the second consolidation right over here, and maybe this is the last leg higher for this price of last consolidation right over here. So maybe we could reverse from here, go back to this order block as I was saying, and making a market maker sell model on the other side. So everything else is looking good. Bitcoin is looking perfect to go to 140, 145K. I'm placed very well. I just want to make sure that you guys who are listening in, that you guys who will watch it in a day or two's time, don't watch it after a month. It's going to be a waste. But who are watching it after a day or two, yeah, you have the right analysis on your side. You are not sitting there thinking what's going to happen. You are sitting there thinking this is what's going to happen and I know it. Now moving on to Ethereum. Now Ethereum faces little to no resistance above the $455 mark, right? Why? Well, there is no, there's no orders placed in the market. There's no sell orders placed in the market. So there is no resistance. There's nothing. And the charts are saying the same story. The charts are telling you the exact same story. Now looking at the weekly on, let's look at the weekly chart at this point of time. So we have basically taken support of this order block on the weekly, the order block that basically pumped the price above the all-time high. So this whole price action right over here took us above the all-time high, took all the liquidity from here. Look at the way we are reacting right now. If we are able to close this candle the way it is, or even a little bit higher, that will do a change in state of delivery on top of these candles. Now once that change of state of delivery happens, you can place your stops underneath this wick and target the upside. What is the upside though? Where should we target? Where should we be looking to go towards? Now what I am looking for is this weekly target of $4,500. Where does that target come from? There's this manipulation leg right over here which took the price down, took all the liquidity, and then the bounce started, right? So if you measure the manipulation leg and look at the 200% to 250% mark, that is sitting somewhere in the $10,000 area. This is my target for Ethereum for this cycle. Yes, it's very, very far. $10,000, bro, you're dreaming. No, I'm not. It's a measured move. $10,000 from current price action is around 2.2x, which is achievable in altcoin markets. Ethereum being the biggest altcoin of all, it is very well achievable. So let's see how price reacts over here. Let's see what's really happening over here to make a decision on how do we want to trade it. Still bullish. Would love to see a change in state of delivery in the next 16 hours. So all I'm saying is a closure above 4620 area. It will give me a change in state of delivery that triggers my long position and I will be happy to enter straight away. Daily chart is looking beautiful as well. Nice up close candles. There's a nice manipulation block over here which swept this liquidity, So even if price decides to come down, I would expect it to bounce from $4,000 area, and that will take me up towards the upside. We also had acceleration gaps right over here, back to back fair value gaps, these two, and the extension is for them is 200% for $4,800 and 400% is $5,161. So we have extended targets. We can take a trade even right now on the closure of this today's candle right from here, stops under this, and aim for this area. That will be still be a 2.71 hour trade on the daily chart. You know, that's a 15% move, but I am aiming higher. I can use this as an entry, as a stop loss, but I am aiming higher. I want price to head higher and faster. Moving on to Solana. $245 is the most significant supply wall ahead for Solana. So many sell orders, right? But will the sell orders stay? Will the sell orders be there by the time we reach that price? I doubt it. For Solana, again, same game plan. There's nothing different. Why? We basically had this nice little move down. We inverted a very crucial fair value gap right over here. We inverted this fair value gap. What happens next? Straight after inversion, we are engulfing the candle that basically inverted it. Now, if we are able to do that, if we are able to close above this, above the 239.85 mark, that for me is a buy. Again, a change in state of delivery after retesting this nice little order block and a pump higher. Inverting you basically invert a fair value gap, you re-invert it on the other side straight away. That shows you there's so much buying power right now in the market. So for me, Solana is bullish. For me, all the altcoins are looking crazy good. But yes, be smart, have extended targets, but do not just aim for the moon. Know where do you want to take the price. And for Solana, it's pretty simple. A rectangular consolidation, and the target of the consolidation is $373. I'm not going to aim for $1,000 Solana from here. If I get $373 Solana from here, I'm happy, I'm taking my money, and I'm running away. So that's my 2 cents on what Solana is going to do. Now I'm going to give you 2 stocks. We'll talk about the 2 stocks that I gave you last time. I'll give you 2 to 3 stocks that are ready for explosion, that are ready to go. All you have to do is wait for a confirmation. Let's start off with Centerpoint. So this is the one that I gave you last week. Centerpoint is still consolidating. It has not broken out as I expected it to. And I am still waiting for a closure above 39.50 for a long trigger. A very, very beautiful ascending triangle formation that's happening. So if you will see here, so starting from here, up, wrong place. Starting from here, going up, ascending triangle formation. You can extend it lower if you want it. This is the ascending triangle, 1 touch, 2 touch, 3 touch, 4 touch, confirmed. Now once we break out and we close above this area, 39.36, for me that's a long, and I can put my stops under 37.98. So Centerpoint Energy Inc., Holding Co., New York Stock Exchange, ascending triangle, looking beautiful. This is the first one that I gave you last week, still waiting on a confirmed breakout. It has not broken out yet. MetLife, I gave you last week as well. Inverse head and shoulder formation on the daily chart. Just a closure above was what I was waiting for, and it has now closed above the line. So I'm going to enter this position tomorrow. My entry would be market open. I'll place my stops over here, 2.52 hour. The target for this will be around 91.83. So looking beautiful, MetLife Inc., New York Stock Exchange again. Now let me give you 3 more. 3 new, 3 nice, 3 beautiful setups. CSG Systems, number 1. Rectangular consolidation is happening on the daily chart. It started off in May 2025. It's still going on. The entry for both sides is this. The upside is 67.57 once we close above. For downside, if we close below 60.54, we'll take a short until $55. A long is going to be until $72.35. We are bouncing very nicely off the midline. So looking beautiful, CSG System International. It's on Nasdaq. You know, the consolidation has been happening for a while. So yeah, so that's the first one. Second one is MRC Global. MRC Global Inc., again, New York Stock Exchange, ascending triangle formation. The entry will be closure above 1580 and the target will be $19. That's a 20% move on a stock, 2.33 hour with a stop loss of 14.45. So wait for a closure above, and that is when you can trigger it. Add it to your watch list, guys. Add it now to your watch list. Last one is Centrica. So Centrica PLC is basically consolidating as well. The consolidation is in a rectangular formation. So we had already had 4 touches. So I'm waiting for it to break out. The breakout confirmation will be just above this area. So 170.55. Once we have closed above that, I will be happy to enter. So Monday closure above it, and that's what will trigger my position. My target will be around 185.5 and stop loss will be just under $165 area. I've given you 5 stocks in a matter of 1 week, last Saturday and this Saturday. Now, if you don't take action on that, I can't help you. Take action, put them, have them in your watch list, wait for that closure, take that trade. Right? That's the goal of Squid traders. That's the goal of this community. That's the goal of trading in itself. Now, moving on to how the week went. This week was crazy good. I had a 69.23% win rate on intraday trading. I took in total 18 plus 8. So that will be what? 18 plus 8 would be 26 trades in the week. So averaging it on around, 5 trades a day with a 70% win rate, a profit factor of 3.69. So people who are not aware of what profit factors are, profit factor means what are the chances of you making money in regards of your losers and winners. So every time you take a trade, for every dollar you risk, you will make $3.69. All 5 days were winners, so 100% win record in terms of days. Trade expectancy of $127.9 per trade. So every time I click the buy or the sell button, I have an expectancy that I'll make $130 overall. And average win to loss rate is 1.64. So my winners are $254 on average, losers are $155 on average. And this is prop trading, guys. You're not trading one account, you're trading multiple accounts. I trade 20 accounts at the same time. So multiply that number now. So this is the net PNL and this is the lovely little calendar. So lovely looking October start, 3 green days and 2 green days from obviously September. A beautiful, beautiful week. And in terms of our multiple, it was crazy good because I think it was overall around 17 hours. So let's bring that in. So let's just edit this and bring in our cumulative R. So if I do this, I do this. So if I do this, I think this is going to bring it. Yes. So 21.18 R overall in a week. So if you're risking even $100 on one account, multiplied by 21.18. That's my week. So it's been a lovely week. It's been an amazing week. I've enjoyed it thoroughly. I'm looking forward to trading with you live. Every day we will be trading on the weekdays, Monday to Friday, 6:45 a.m. That's the goal. That's when we'll be trading. It's going to be on PubFun and it's going to be on YouTube. So be available. I'm looking forward to meeting you again and thank you for watching. Welcome to Squid Trader.